Welcome back. You are still watching Portfolio Watch. Now, the rise of financial misconduct in the South African financial sector could be a reflection of a systemic problem with regulation and also accountability. Making the right decision for your portfolio becomes complicated when auditing firms are not required to uncover wrongdoings. Joining us to discuss how to navigate your investment choices is Wayne McCurrie, an analyst at FNB Wealth and Investments. Wayne, thanks always for your time. I mean, about five, in fact, a handful of companies standing out right now in terms of the big allegations around corporate scandals against them. Share prices have been pummeled as a result. But the question is, do the businesses still offer an investment opportunity? EOH, though, as a technology provider, as an investment case for you, would you buy?
It's still a very, very large company in this space. Look, I suppose taking a step away from EOH, in South Africa, hopefully things change into the future, but in South Africa, any company that does a lot of business with the government, you've just got to be very careful.
They're scaling down.
Yes,
and they've scaled down quite significantly in terms of public sector employment.
But you've just got to be careful. Now, they haven't, to be honest, they haven't put to bed all of these allegations yet.
Sure.
They've had internal investigations, but as far as the market is concerned, they haven't put this to bed yet.
But we've got a new government, though, so do you still hold the view that any
No, I think I'm pretty sure it's going to change, and I sincerely hope that it's going to change.
It's going to take time.
But these deals that EOH did come back a long time, go back many, many, many years, and there's been these allegations for a very long time.
Then you've also got that Microsoft deal.
Yes, what Microsoft just said,
and Department of Defense. Yeah,
Microsoft just said, no, we're pulling our agreements with you because of some evidence that they had to pull the agreement or some allegations we just don't know. EOH had a business model of buying lots and lots of small IT service providing companies and paying them with very expensive shares. And when you do that, you boost your earnings enormously. So for many years, they showed strong earnings growth. The moment the share price falls and you can't use that as your currency, your earnings disappear as well, and the share price disappears. So that's effectively what's happened to EOH, even more so than the allegations of corruption and dodgy dealings, is that their underlying business model of buying cheap companies with expensive shares has collapsed. It doesn't mean there's not a business here. So if you read Steve van Coller and all of the things he said there is still underlying profits that they're going to make here. But whenever you get something like this, the market sits back and says, let's wait until all the dust has settled.
All right.
So the market will sit back and say, let's wait.
And I can just see, I mean, judging by their share price, the share price is quite flat over the past year. So a lot of sitting on the fence.
But this one, there is a business, there is an underlying business here, yes.
All right. You buying?
Not at this level. I'll wait till the dust settles, then we'll look at it again.
All right. The Resilient Group of Properties, sure. They have done so much to convince the market and investors that all their concerns, they don't really have to be worried about. They've hired independent investigators. Of course, there was the investigation by the former financial authority here in South Africa, which has cleared them of quite a lot of those allegations around manipulating of the share price, insider trading, fronting on their Black Empowerment scheme. Yet it doesn't look like that share price is ticking up any higher. Why?
Look, two things were wrong at Resilient. One, you've spoken about, let's just call it share manipulation allegations and all of that. But the other one was they inflated the net asset value by recording underlying shareholdings at market price, not at book value. So they said, here's our book value, which included market prices for a certain number of investments, not the book value. So there was a misrepresentation of net asset value by doing this. Now, of course, they've changed all of that, and the share price has been pounded. So this share and other property shares, because of this scandal a year ago or 2 years ago, these things actually represent true underlying value now. So I'm actually very interested and very positive on South African listed property, because 4 years ago, when you bought shares, the big ones, you were getting a 7% yield. Now you're getting a 9 or 10% yield. And to me, that's the first time it's happened in a very, very long time. And that's why I'm positive on listed property in South Africa, simply because the overinflated prices have come down enormously. And it's things like Resilient that have caused that, but of course the very poor economy itself has also caused these property prices to come
And that's the thing, though,
down.
because I mean, outside of the allegations of corporate malfeasance, you've got that underlying economy that's really weak. I mean, we're seeing these guys retaining tenants is very difficult for them.
And,
I mean,
and you're dropping the rentals.
You're dropping the rentals. I mean, I know a couple of guys who used to occupy properties at major property companies that have moved out because things have just gotten too expensive. So I'm just wondering for how long, though, are you holding out?
Until the economy turns. But you know, the thing is, if they're priced at the correct price, you can afford to wait for the economy to turn. If they're too expensive, the economy might not turn in time, and that's when you see these big share price falls. So let's ignore all the scandals in the listed property thing. The economy wasn't doing well 2 years ago, 3 years ago, and yet these things were trading at a 6-7% yield. It was just too much good news. Now they're at a 9% yield. That's far more in line with what's happening in the underlying economy. And of course, we all hope and pray at some stage the underlying economy will turn up. Because if it doesn't, then 9% might not be cheap enough. It might have to be 11%.
Maybe, but of course, a lot of these guys have implemented really strong diversification strategies. They've gone out to Australia, they've gone out to Europe. Some of them are there in the UK. When you're looking at the listed property space, do you go for guys who are diversified in terms of geography by revenue?
You
or
do a little bit,
on
but
the SA guys?
you can buy overseas property if that's what you want. You don't have to go to a South African company that's got overseas property to get that exposure.
Okay.
So you want the focus. So if they've got 10, 15, 20% overseas, it does give you some diversification. But you as an asset manager should decide, at this price, do I buy European property, UK property, South African property? And you don't want too much diversification within that decision. But of course, the reason why a lot of people went overseas is it enormously boosted your earnings in year one. Because you could buy property at a 4% yield, but pay 2% interest. Now that sounds fantastic because you're earning a fortune. But unfortunately overseas, there's no inflation. So every year your rental, there's no escalation in your rental. So every year it stays the same. So in year one, you get this boost to earnings. But in year 2, 3, 4 onwards, there's no increase in that distribution. It stays constant. So it looks wonderful when you go to Eastern Europe and Portugal and Spain in the year that you do it, but the next year there's no added return. Whereas in South Africa, despite the fact that you got these negative rental reversions, if you sign a lease today, it's still got 5-6% rental escalations for the next 5 years for the duration of the lease.
Sure.
So at least going forward, you get an increasing return, whereas overseas, there's no escalation. So overseas, unless the rand weakens, you're not going to make a good investment over time. You've got to get a weaker rand to boost your rand earnings over time because the underlying investment in the low inflationary environment doesn't grow.
Right. The biggest loser of them all, Steinhoff International. We've spoken about this many times, and you've communicated your position that you don't think that Steinhoff is a buy.
No.
But perhaps tell us why one more time.
We are going to be sitting here in 10 years' time, still discussing Steinhoff, because these legal actions, these class actions, Christo Wiese's suing everyone who's ever been involved there, that won't be resolved in 10 years. And I still think that the quantum of the legal cases is bigger than the size of the company.
Sure. What about it from a shorting perspective, though? Or there's not much room for it? Yeah.
I suppose you could short it. I'm not a big favor of shorting, but I suppose you could. But I mean, my view is going to stay around this 1 rand, 2 rand, 2 rand 50 cents for a very, very long time. Because, unless all of the creditors, all of the people suing Steinhoff, unless they can get together and say, if we carry on down this route, in 10 years' time, we're still not going to be finished, and it's going to cost a fortune, and the company actually can't pay all of us because there's not enough money.
Yeah.
And they come to a separate arrangement somehow, who knows how. Literally, unless that happens, we'll be sitting here in 10 years' time still discussing all the legal cases on Steinhoff.
Okay, quick one. It's associate, though, Pepkor.
Pepkor's a good company, yeah. Buy that one, we actually own it.
You own it?
Yeah.
Okay.
There's no problem with that.
All right, Wayne, thanks so much for your
Pleasure.
time. As always, that was Wayne McCurrie from FNB Wealth and Investments. And that is where we leave it for today's Portfolio Watch. Thank you so much for joining us. And if you do have any ongoing feedback, do keep in touch with us by tweeting us at CNBC Africa. Don't forget to join us again next week, Tuesday, same time, same place. That is 7 o'clock Central African time in the evening. Good night.